I have liquidated my positions in Amazon, Microsoft, Apple, Tesla, and Google. Why? Because the situation has changed in the world. They all gave very good guidance in third quarter as to what their profits are going to be in the future, in the fourth quarter. But I don't think they're going to make them. And the price of a stock is a multiple of its earnings, and I think their earnings are going to be down. Why? Well, interest rates are up, so their cost of debt service is up. Then we have the price of the dollar up 6%, and they do about 56% of their business internationally. So that's going to be a pull down on their earnings, and I don't think they're going to make them. Then you add to that interest rates going up, and the consumer is in a bad situation. Credit card defaults are down. I don't think people are going to be buying cars like they used to. They're still spending more money at the pump and then at the grocery store. So I think these stocks are going down in fourth quarter. And then we add to that the Israeli situation on top of the Ukraine situation. And I have to put in some risk management. And then Dan Niles appeared on CNBC yesterday morning and confirmed everything I believe. Let me share his opinion with you.
Stock prices are multiples times earnings. I think what's going to get tricky, though, is earnings season coming up, because if you look at the Magnificent Seven and you look at them compared to the overall stock market, you look at the Russell 2000, it's about 20% of their revenues comes from outside the U.S. For the S&P 500, that number is closer to 30%. The Magnificent Seven is 53%. And the reason that matters is the dollar has gone up about 6% since mid-July, which is when most of these companies guided. So that's a pretty big headwind to the fourth quarter guidance or looking into next year. And then on top of that, obviously, oil going up impacts some of them as well. So, that's, to your point, Joe, I think earnings, that's where actually a majority of this risk lies as you think about Q3 and, more importantly, guidance into Q4.
Best of Us Investors presents Kerry Griegmeyer.
So there you have Dan and I's overview. Let's talk a little bit more specific. Amazon has some tremendous debt that they're dealing with as a result of building all the distribution centers, and their cost of debt service is going to go up, and that's going to hit their bottom line. That's a given. Then you have Microsoft. Microsoft took a big run up as a result of ChatGPT, and some of the luster has faded on that, and so I don't think they're going to see the growth that they had projected, and they have yet to be really monetize ChatGPT and artificial intelligence. So I think fourth quarter is going to go down for them. Apple has had what I believe to be some disappointing sales, and then their exposure to China, it does not make that a good situation in the next quarter. So I expect them to come down. Tesla, the consumer is not strong, and they are not making the production numbers that they have projected. And so I think they'll go down. And then Google, that was probably a mistake. I sold it. I'm trying to find a price to come back in. I think there will be a bit of a downturn as fourth quarter earnings of other stocks come down, and it'll pull Google down, and I'll buy back in. Nvidia and Meta, I continue to hold. But let's see what Dan feels about these individual stocks, and you take some guidance from him as well.
We are long two of the Magnificent Seven, which is NVIDIA and Google. We like both of them. We think they can both do beat and raise quarters. We're short two of them, including Apple. And then the other three, we're most likely not going to be involved, or more likely to be on the short side. So for us, we think that market's going to go up between now and the end of the year, most likely. Obviously, the situation in Israel complicates this a lot, and we're managing the portfolio daily because of that. But I think looking at tech stocks, given the headwinds they have, you're asking for a lot between now and year end, because remember, the Magnificent Seven are up 96% on average year to date. The equal weighted S&P is flat. So I think it's going to be hard, especially with the valuations where they are for the overall market, which is above normal by, say, 10 to 15%. And for a lot of these names that are driving that overvaluation, to ask them to pull it much higher. And I think you're going to really have to pick stocks. You can't just buy a basket of all seven and expect them to work.
What's the other short, Dan? You said Apple. You're thinking about shorting three. You're short Apple, and then you're only long two. What's the other short?
It's Tesla, because we just think that with auto financing rates as high as they are, And with they've got a pretty high bar to clear going into Q4. At the same time, you've got consumer running out of money in terms of excess savings, and then you've got student loans restarting. We think there's a lot of headwinds in the stock. It's done great this year. We're long Google and NVIDIA because we think those are the two. We feel confident they're beat and raise quarters coming. But remember, even with NVIDIA, and this is a warning sign, right? They beat estimates by 21% for July, raised the next quarter, October, by 27%. The stock's down 4% from the day before they did that. So you're going to have to put up really good numbers if you're these other companies that don't have the growth that NVIDIA has.
There you have it. Two people's opinion on what's going to happen in the fourth quarter earnings. And when you add to that the geopolitical situation, it's just not worth taking the risk of taking on these headwinds, particularly when you're in an environment where everything's awry. I mean, we don't have our Congress basically together. I shared with you a video yesterday from Paul Tudor Jones, his take on it, one of the best investors in the current history, and basically saying we've got three countries with nuclear weapons who don't like us much anymore, and now Iran is joining the club, and so it's just not worth taking the risk. Do I believe that the market will find its way through this? Yes, I do, and eventually artificial intelligence will achieve what it is going to do, and it's going to change our world, and we'll be back on the bus 12 and bus 13. But right now, I think it's the safest place is to sit on the sidelines. Am I going to short Apple and Tesla like Dan is? No, I don't short stocks. I'm not that big of a risk taker. I'm not going to bet against the house, if you will, but I have to take into consideration what's happening. I got some questions. With all the selling you're doing, you're going to expose yourself to a lot of taxes. I'm sorry, folks. I don't allow taxes to guide me. I do some tax planning, so I do a lot of my trading inside a Roth IRA, inside a traditional IRA, inside a foundation, and you don't have exposure there to capital gains taxes. If you aren't doing those kind of things, you don't understand the tax code, and you need to become more astute. That's one of the objectives that I have on this channel, is to help you keep more of what you make. And the number one thing on that is to understand the tax code. And if Donald Trump didn't teach you that over the last 8 years, then you haven't been paying attention. So that's what Kerry's all about. That's what he's doing with his portfolio. More importantly, what is he doing with his business? As you may or may not have observed, the financial end of YouTube has shrunk dramatically. Most of us, our income has dropped by 80% from what Google pays us for selling ads against our channels. And in my case, I will raise my hand and say, and my subscriber base is going down. So what do I have to do in order to make that work? I have to change my business model. So now I'm selling something. I'm selling my knowledge. I'm selling the knowledge of 3 other people on my website. I'm doing analysis in depth on the debt structure of every company in the S&P 500, and I'm doing that work, and I'm sharing it on my channel, on my website. If you want to be a part of that, if you're willing to pay a nickel to make $1, well then, okay, I can be of some service to you. But if you expect everything to be free, then I'm sorry. I don't work that way, and I have yet to see a successful business who gives everything away, other than maybe Google, who then sells your data to advertisers to make a profit. And that's what Elon's trying to do now with Twitter. I have no problem with that model, but you don't come to the channel and you don't watch the ads, so I don't get paid, okay? So learn how the business works. If you want to be a part of our spend a nickel and make $1 or make $10, come join our tribe. Come see what we're doing. Go to the website, look for this box, and check the platinum area, and we'll work together. Otherwise, you're on your own. So get on the bus.